I personally believe that excellence, right? Excellence has a process. And my goal isn't just to educate people or enlighten people, but it's to take them through the phase where the results I get, they can also get such results, right? At the end of the day, if we could say from 144 subscribers that are in this group, 10% are capable of replicating with ease what I'm able to teach, I'll be a very, very fulfilled coach. Because if, let's say, for example, 14 people are competent traders and they're able to analyze the market and you're all making profits, it's got to be so beneficial, right? I could remember back then I had this student who, when he came to me, he was working a 9 to 5 job. He was quite successful, right? Quite comfortable, but he wasn't satisfied because what he was earning versus the bills versus everything he had to, let's see, okay, pardon me, versus everything he had to sort out was, cumbersome. So let's say he was earning about $1,000, but the bills were about $700, and sometimes the bills were as large as $3,000. But here's the thing: no matter how hard you work, you need a system of leverage, and this is why forex is important. But we are not going to talk much about leverage today. We're just going to focus on what we're here for, which is live analysis. So we will be taking a live analysis based on what we've learned so far. And this is going to be something straightforward, straight to the point. We're not going to waste any time. I will be taking you guys through a little tutorial. I tried creating a tutorial video, but apparently a portion of that video got missing somewhere. So I'll have to start the entire thing again. So I most likely will just host that here on the platform and then guide you through. Then subsequently, during my spare time, I may or may not, do that, right? So, but basically, I would guide you through the tutorial process. And for those who aren't here with us, they're just, they'll head over to my YouTube channel and watch the video during their spare time. So we'll just head over to Chrome for those using PCs. We'll be heading over to Chrome and we'll be making most of our analysis on the platform I'll be talking about. All right. So the first thing we'll do is we'll head over to Trading View, Derivative Trading View. This is what we'll make out. Okay. I don't think you guys can see my screen. Okay, I'll share my screen. Right, I'll share my screen right now. Oh, they've restored the light. Beautiful. Good. If you can see my screen, can you see my screen? I hope you can. My other device is actually charged, so I can't really log into the live classes to see if you all can see me or hear me or not. But I just hope you guys are following me. My other phone has been super busy. Let's see. If you can see my screen, I just want you to react to this message. If I'm writing something right now, just react to the message. Right, so 1 or 2 reactions and we're good to go. If you can see my screen. Okay, wonderful. So the first thing I'll be doing is taking you guys through the process. You can also chat me up on WhatsApp, right? So we are in this together, so I know how many people are following you. But the first thing we'll be doing is we'll head over to Derivative Trading View. Now, Derivative Trading View is a platform, all those technical analysis, the charts. We all know, we most likely do them on MetaTrader 5, but there is a dedicated platform where you can head over, make your analysis properly. It has all the tools. MetaTrader 5 is quite limited in being able to give you the results you need or certain tools for a more accurate analysis. So the first thing you do is head over to your Google and you just type Derivative Trading View. derivative trading view. Now it's going to take you to a platform where you'd be able to make those analysis properly, accurately, and I will guide you on how to navigate through the interface. I will, assess this class if the tutorial is something people could watch. That's good and fine. If it's not, I'll have to make something unique that's self-explanatory, so everyone follows along. Let's see. This part I don't enjoy, the part of low network. Okay, so I'm not going to waste time right now, so I'll just head over to this chart, deriv.com. Yeah, internet's quite slow, so I'm just going to go to something already pre-existing, and I'll start from there. Right, good. This is much a chart. Pardon me, I'm a bit under the weather, so I've been having a bit of cold, but that's okay. So on the platform, this is exactly how it looks, your derivative trading interface, and you'll be able to make the analysis. So I'll be guiding you. On the top left corner, the first icon, you are going for an exchange of currency pairs. So you only get currency-based pairs to trade with. This includes your, what's it called, AUD, JPY, that's Australian dollar versus the Japanese yen, Euro USD, GBP USD, USD JPY, it's called commodities. Gold is a metal, palladium is a metal, platinum is a metal, silver is a metal. You all find them here in commodities. So for those, who are thinking of using different brokers, Deriv, personally, I've been using Deriv for a while. This is not really like me trying to get affiliate commissions. I don't even have an affiliate link as of the time I was making this video. We're having this class. Probably later I may get it. But yeah, you can get on Deriv, and then finally derived, your commodities. This is what I love. I'm a synthetic trader. I've said this before during one of our sessions that deriv or synthetics are, you only find synthetics on the deriv interface, meaning if you're not using deriv as a broker, you can't get any of this. You won't get it on any other platform. Volatility. You're not going to get it on any other platform. I hope we're still following. Let's see. Are we still following? Are we still there? Yeah, but okay, so I think so. That's good enough for me. Yeah. So back to what we're doing. The derived volatility index and all of it. Let's see. So you can all get it here. And cryptocurrencies, for now only BTC and Ethereum, right? So we have that, and that's pretty nice. Let's still head back over to where we are here. So let's say I want to make an analysis on step 500 index. I simply type step, and a couple of options come in, and I'm able to tap, and it takes me to the chart, right? So right now this is step 500 index, and as a matter of fact, we're holding a trade on this. This is a 24-hour time frame trade. Okay, so that's pretty nice. Then the next icon is we see the compare or add symbol. I've never really going to explain what I don't use, so we'll just head over to time frames. The next on the list is the time frame. This is where we have different zones, from the 24-hour time frame, the 4-hour time frame, the 30 minutes, etc. There's an elaborate explanation on why this is important and how you can use it. One is for analysis. There's the top-down analysis, and it's not going to be talked about in this class, but we're just going to highlight this. Highlight the 24 hours, the 4 hours, the 1 hour time frame, the 30 minutes, the 15 minutes, the 5 minute, and the 1 minute time frame. You just mark them up. Then the next over here is the candles. Now on this candles part, we have the line candle. Some people would prefer using lines. I don't like that. Or they prefer using like areas, right? Areas, I also don't use that. I just use the normal. We also have several classifications like the Heikin-Ashi candles, but for simplicity, we use the ones we know. Green represents bullish, red represents bearish. That's the basic ones we know. Then we have the forex indicators, the accelerator, oscillator, the RSIs, all of that. It's all here. Then here is where you can undo your scroll or whatever. Then over here by the top right corner, we have the save. You can save an analysis here, and it's going to be saved for whenever time you log in. You can also like go to chart settings, full screen mode if you're interested in that, or you could copy an image or take, what's it called, download the image if you want. I don't really use that. However, apologies, I think I may have gotten a bit disconnected for a moment again, but I think, yeah, we're back on track. We're back on track. We're back on track. So I just have to take my time, or probably I should give like poll. Should I create a separate tutorial for this, and then just head over to the main, what's it called? Just create a tutorial for this subsequently, and then for now we'll just focus on making an analysis. Yeah. So I'll create a tutorial for this, guiding everyone to minimize time so we can all get started with everything necessary. Let's see. Okay. So what we can see here is step 500 index on the 24-hour time frame, right? We can see this a nice 24-hour time frame. But what we have to mark out first for me is, what is the market doing? Where are the highest highs? Where are the lowest lows? Where is the market going? So the first thing I'd like to always do, which by the way, this is basically my principles. I like to know where the market is going. Is it bullish? Is it bearish? Is it consolidating or forming a confluence? What is the market doing? So I'm just going to mark out my twos. Okay, good. So the first thing we notice here is the market's going up. So it's an upward trend, an obvious upward trend to the upside. This is simply what we can say from the market bias right here is it's bullish. And this is on a daily time frame. So on my daily, time frame, I'm actually looking for higher highs, or I'm looking for directional bias, right? Where is the market going? Where is that bias going? And from this higher time frame, I also want to know where is the highest point that the market has reached. What points exactly has the market reached before? These are my biases. I'd like to know that too. So I'll head over here. I'm going to mark out these zones, indicating that once the market goes and reaches this strong resistance level, it's got to make, it's going to most likely go for what's it called, sells. It's not always the case, but it's nice to mark them out early. So I'm also going to mark all these zones here. Right, all these zones from this point to this point right here. And I'm going to put them right here. Good. So I noticed that at this point, the market forms a nice, strong support zones at these levels. So that's really nice. But that's on like a larger time frame. So I'm just marking out all these key levels. But that's by the way. So we understand that number one, right here we can say the market is going for a higher high, meaning it's bullish bias, right? On a higher time frame. Bullish bias. Good. So once that's done and we are certain, okay, this is what we have, we will zoom in, let's say for a 4-hour time frame, for example, and to know what the market's doing on a 4-hour time frame. And we can see a lot of volume right here. So we can notice there's still a lot of volume pushing the market higher and higher. And for those in my copy trading or signal group, I gave a signal and we've been in like massive profit because this is actually the directional bias of the market. So we can notice at this point, the market went to this level, touched that peak zone. Remember that peak zone I marked, right? Came down, formed a new breaker structure at this zone, didn't even come for a retest. This is part of the reasons I love step index. Once you know the direction, the volume always follows the direction of the steps. So it's not like it's being confused. The market knows exactly where it's going sometimes, right? You always just position yourself properly. So we could see yeah, these levels, good. And on the breaker pattern, there's a path I love. Is it here or here? Okay, I think it's here. Give me a second. Path. Good. So we could see the market came here, respected these key zones, formed, preceding higher highs, made higher highs, came down here, gave a huge breaker structure, which came directly down all the way here to remember this zone we marked out. This is a very good zone indicating at this point, this is where the market actually started to form a new directional bias in the entire thing. So whenever the market came to this zone, that was a very nice entry zone, and we easily were able to mark that out. So now that we marked it out, you could see it really respected that zone. Now it's coming back. So what we're expecting in the worst case scenario is that the market is going to come for a retracement and is going to cover up all these gaps right here. That's the simple methodology or analysis. And part of the reasons we can easily say that is because it's covered all this liquidity, all these spaces, right? It's obeyed structure is gone, making higher highs. It has hit the significant resistance level, which is right here, resistance level slash I'll just put resistance level right here. So we understand that at this point, the market always comes to this place slash we're going to put the peak. So we understand that at this point, this is where the market peaks. So at this particular point, buyers didn't have the ability to push it up, and the sellers had the advantage. And now what they did was, at this point, it was all a struggle of power, making higher highs. But when they reached this point, the sellers had more control. And even once they reached here, they formed like a breaker structure covering down to this liquidity gap. They covered everything back to this place. What it's simply telling us is at this point, this level right here, this key zone, where we marked out this area, the market or the buyers love this point. They love it whenever it's here. This is where they have their capacity. So imagine like Gucci or Versace is having a discount sale on all their products. And you realize that they've also realized that at this particular area right here, maybe price reaches that $200. There's a lot of hype. There's a lot of buying power. A lot of people would rushing into the market. So there's a lot of demand. At this point is a favorable point of interest. And so now the market is pushing, making higher highs. And as we can see, it's already, profitable. I don't know if we're all following. Sometimes I get carried away with these things, but I hope we're all following. I really do. Okay. So probably next time we'll have to start something with like, what's it called? Pardon. I got a little bit distracted, but we may have live classes on like YouTube or something. Good. Let's head back. But in my VIP group, we could see it here. I gave the setting or the signals on that. But still, that's nice. That's nice enough. So what we can do here is we'll simply wait, and we would what we will do is we'll wait for a perfect entry, and in that perfect entry we'll be able to put in our stop loss and I take profit. So what we'll be doing is we'll be waiting for the market to simply come for a retest. For a 4-hour time frame, we could look for entries around, I think there's market time frame correlation. So a 4-hour is correlating to 30 minutes or 15 minutes. I think it's about 15 minutes, right? I'll check that out just to be clear. So we'll have a 15-minute time frame or a 30-minute base time frame, which we'll be able to use. Okay, so let's say we'll be heading over to the 30-minute time frame, and we're going to put something around here. Okay, let's delete this. We're putting it here. So we'll wait for the market to come to this zone right here. Once the market hits this zone, it's going to trigger our entry. And then we'll put around here, which is the former high, right? And we'll put the low just below this point. If we put it down here, it's not really going to be, it's not really profitable enough, but we're looking for something. We'll be patient here. This is a wide enough stop loss and a wide enough take profit. Good. So we're going to put it at this level. And even at this level, what we can see here, what we can mark out is the market here. Good. So what we can see here is the market came from a little. Good. It's going to try to cover up this liquidity gap. Let's see what's happening on the 1-hour time frame. Yeah, going as planned. And now we'll just be patient enough for the market to come. So if we're waiting for this, or I'm trying to give this as a signal on my 4-hour time frame, or my full time frame is going to look something like this. This volume is quite really voluminous. Okay. Apologies about that. So let's see this broken volume push to the upside. The market normally would come to cover this gap from this point to this point. I'm even suggesting we like, based on what I can see here, not even cover this gap. Nah, I may not, but okay, we'll just leave it there. If the market triggers it, good and fine. If it doesn't, good and fine. I would make further analysis on that later so I could see what really is happening. But for now, we can see 30 minutes is saying that, so we will just be patient. Simply be patient. So that's my buy bias on our step index 500. That's okay. So I'm just going to send this or download the image and give it to like you all on the app. How are you guys? Good. Step index 500. So that's basically the bias. We've got like other things to like figure out. So that's it on the step index 500. Let's see. I hope we've been following so far. Okay, so we'll do something more practical. We've also had sessions together, and in those sessions, I talked about what's it called? Chart patterns. So we would focus on the chart patterns. So everyone will follow along. We only look for what's it called? We'll only take trades that align with our chart patterns. And even in the chart patterns, we'll find all those chart patterns on the internet. So it's going to be 100% transparent. No need carrying you guys through all of this, right? We'll just do the normal typical chart pattern preset or formula. Now let's head over to, we'll just type something like chart patterns and technical analysis, right? Technical analysis. So we're just going to look for something straightforward. Images. Let's get something like this. Let's look for something pretty basic that once we pick, we'll be able to understand what's happening and what we can do. Which of these would be nice? Okay. Pardon me. Let's see. Chart patterns, sheet. And hopefully, let's see what we can do about that. Okay, let's see. Okay. So the chart patterns and technical analysis, we will use them as guides, and then we'll take only trades that corresponds with the typical charts. Some people are like sending me messages and asking, what's it called now? They're asking me like they are not seeing that. Please go through the YouTube videos, right? I've taken my time to explain how to set up an account with Deriv. So do me a favor, help me. While I've helped you, or help me to help you, so we both help first. To my YouTube channel, check out the videos, watch the guides, and I guarantee you, those questions will be answered. In fact, there are a lot of people who usually go through the channel, watch the videos, and they don't even need to reach out anymore because they have the understanding, right? So please just help me out. Okay. So I'll put this like home on the desktop. Save this, bro. And reaching him right now. Set the desktop. Good. So advanced trading right there. Good. Okay. Apparently this stuff is trying to like frustrate my efforts. I'm trying something and it's not letting me try what I want to try. So what we'll just focus on right now is we'll just simply focus on getting something out of it so we are not wasting time. Save image. If the image isn't going to get saved, then we might as well just use it from here. Or we put something like full screen. Okay, it's saved. Good. That's good. So show yourself. Okay. Now I just have to cross check and make sure that everyone can see what I'm seeing. Okay. We're not. Let's see. Let's see. Okay. So that's everything, I guess. This is so confusing at times. Okay. Give me a second to figure this out. We're just gonna work with what we have. We'll be working with what we have, so bear with me. This should do good. So what we can see here is like a bunch of chart patterns, and chart patterns will help us analyze the market properly. What is the market doing? How do we navigate or align with all the market stuff? So for the purpose of this video, I will try as much as possible not to like overwhelm you guys, and I'll just do something pretty simple so everyone can follow along. Okay, let's see. Wow, this is a lot of work. Okay. Good. Now let's say I want to make an analysis on what am I going to make an analysis? Let's say volatility 75 1S index, right? I'm going to make an analysis on that. So this is the 24-hour time frame on volatility 75 index. Pardon me. On the 24-hour time frame, we can see it's an obvious bullish trend. The market is going higher, and this and this. Okay, I can't help myself but to make like basic analysis of this market, and what we can see right here is strong volume from this angle to this angle right here. But now the question is, what pattern does this fall with? The market is going well. It's reached a really crucial point, crucible, so we can understand the market. So here at this point is either going to break up and continue going up, forming higher highs right here, will break a structure, retest, and then continues this higher high for the week, right? Or may probably would reach like half of this or get to this point right there. Let me quickly do this. Good. So it may actually even stop here, depending on the volume of the market. So that's on the daily time frame or bias. But we're trying to, as much as possible, make analysis using charts. So what we can see here is, I'll delete this. So we understand first from the daily time frame, the market is making higher highs, or at least it has reached a peak point. But on the 4-hour time frame, we can see something, right? The 4-hour time frame, we can see something. Let's head over to our chart pattern. Let's see. Pardon. What's this button do? I want like full screen. I don't want to head over to any of that. Like I want full screen view or something of that sort. Can I get that here? Okay. This is what we got to do to minimize. Yeah, this is perfect. So, pardon me. Just have to do this so we're able to follow. In the meantime, while I'm still trying to like figure out how this app works properly. No, I'm not looking for visual matches. Oh my goodness. This setting only allows me to show this, so I'm going to share the screen of this so we'll quickly get in and get out. So let's share the screen. Now, if you notice, right, what I'm seeing or observing in this particular, point is the market is most likely giving this what we call over here a falling wedge. We call this a falling wedge. right here, continuation patterns. And you'd see over here, the market came up, then went down, came down, you know, all these support and resistance zones equally respected. Falling wedge right here. Now let's head back over to our main analysis so you'd see what I'm talking about. We'll head over to the charts right here. Now, over in advance, you can see this falling wedge right here. The market came down here. And then you can see right here, just at this point. So that's on the 4-hour time frame. And then he gave this huge bullish push to the upside. So you can see that simple chart pattern analysis actually helps and is effective. Don't let anyone tell you otherwise. The market or chart patterns are simply the representation of what has happened in the past and what is most likely to happen in the future. A doctor or a cardiologist who goes through your heart will not say, you know, you're a unique human being, so I'm going to dish all the history or historical data we had in the past, and I'm going to, you know, give you unique prescriptions based on a common symptom. No, history always repeats herself, and obviously we can see history is repeating herself. So, you know, basic chart patterns also helps in technical analysis. And we can see this is an obvious falling wedge which respected these zones, and in fact is coming to even hit this level right here. And it will hit this, it will right now hit this level right here. But we can see what the market simply did. Pardon me. Pardon me. Market came down, came to the support zone. Resistance came here, broke a structure, volume came up, you know, pushed higher high, and we're looking at it coming back here. Good, perfect. And that's exactly what we analyzed here. Pardon me. And that's exactly what we just saw here, didn't we? On the falling wedge. We can see that on the falling wedge angle, the market did exactly what it said it would do, which was to first come down, right? Then comes down, then forcefully. So this is where you put your entry when it breaks out. Then, or you wait for the retest. But most times when, you know, it has a clear bias, volume is always moving in that direction. It heads over to the target. So we can even make an analysis of, and it will be proper, right? Is that the market will still make higher highs. And it's correct. The market will still make higher highs based on what we're seeing right here. So if we're waiting for an uptrend, we can right now enter this at volatility 75 index on a 30-minute time frame. We got to just put this right over here at the former POI zone. And we're going to enter this market right here, right now. Just going to make sure like it's an instant execution kind of stuff. Then we're going to put it right here. And we're going to wait till the market breaks up until it reaches this point right here. Good. Now we have to put the SL quite wide at this particular level right here. This level right here is where we have to put the SL. Reason being that we noticed that, okay, this was a strong support zone at some point. So if you could wait, you simply wait, and then you put it right over here. The simple 1 to 2 risk to reward ratio when you calculate your things entry, or yeah, you'll be okay. I'm gonna zoom out or zoom in on this. Simple 1 to 2 risk to reward ratio, especially when we already analyzed earlier on that our market is on a bullish time frame. So you can actually put this here, right? You can put this here, make it low enough. You put it here. And you can actually aim for a 1 to 9 risk to reward ratio. So like that's like over here. Based on the analysis on like the higher time frames we did earlier, it's going to take what's it called, a lot. And you'd have to have like a huge amount of patience, and you may need to, but basically this is what's gonna happen. Based on simple supply demand tactics. Volume after volume is supposed to be the typical retest. I don't know how much of a retest that's gonna happen, but I'm going to put this here, make sure it covers over here, and I'm going to put this over here. 1 to 2 risk to reward ratio, and then we leave the market to do what the market does. So I will be checking this out in like the next 2 hours because we've done everything we can do. Yep. Boom. Now, once you've placed all these things and you've done everything, you simply leave the market to do what it does best. And I will be checking this. Obviously, anything that happens here, I will just let you guys know. So we're putting something here. Tap on this angle right here. Then this is the entry point right here. This is our take profit 1. This is our take profit 2, which is over here and over here. So we're going to put stop loss. Stop loss is at 5899.8573. 5899.8573. So we'll put our SL up. Now I'm just going to share the chart. I'm just going to share the charts. No need stressing over it. Let's see. Got to put this. Ooh, that's volume. Nice. We're going to copy the image and I'm going to just paste it over here. And then we'll simply wait for this to play out. How it's going to play out. Pardon me. So it's a simple technical analysis based on chart patterns and overall bias of the market. Now we can see obviously the market is going for a really bullish move. Oh, sorry, is it bullish or bearish? Bullish, yeah, it's trying to cover that gap as expected. All we need to do is be patient. Then what else again? Volatility 75. We can check out another pair, maybe boom and crash index. But I'm not going to check boom and crash index for the purpose of people not understanding what's boom and crash index or how it works. But let's just check that out. So the boom indexes and the crash indexes work totally different from your normal currency pairs, and I'll tell you why. The boom indexes, for example, this is boom 1000 index. How it works is the market starts to give gradual downward ticks, meaning in a boom index, there's always a sudden boom. What that boom simply means is a spike. Let's head over to a smaller time frame, the 1 minute time frame, so we understand this. You can observe this on a 1 minute time frame, right? Now you can see this is how boom indexes and crash indexes work, right? So there's always a little tick. Those ticks are steady, gradual, slow, and steady. They give the illusion of stability. Then there's a sudden boom. Now, how high that spike can be, you can't determine it. It is sporadic. Like you can notice right here, the spike here is pretty small, right? Very small, good. But you can notice right here, the spike here is so large, it covered both the lower low, right? The lower low, which is over here, covered everything, removed all those previous, covered everything in one spike. So let's say you had entered here on a sell, thinking I was going to sell higher. And instead of it selling, it decided to boom. And now it's not like it boomed and breathed. It's just one spike. Now, the bad thing about the boom index is, pardon, when you are trading against the trend, your brokers can't help you. So for example, on a boom index, it is going down incrementally, right? And let's say you decided to sell when it's a boom index. Your broker, that spike, this spike that happens, this spike that occurs in the market is too fast for the middleman to be able to take your order. So even when you place stop losses especially when trading against the trend, it doesn't work. So I wouldn't advise someone who doesn't know what he or she is doing to even get anywhere close to this pair. I've traded this pair. I've made so many profits, so much profit. I know what I'm doing, but at the same time, I've also had my experience. My first largest loss came from trading boom 1000 index. That's a story for another day. So we are not really going to focus on this. We're just going to leave our technical analysis to play out because I'm tired of talking right now and I've been coughing lately. So we're just going to wrap it up here. Maybe subsequently, when I've been able to sort out a couple of things, we'll be able to have more live classes where you can ask your questions properly. But for now, I'm going to put a wrap on this. You can watch this on our YouTube video or YouTube channel. And by the way, if you aren't following me already, you should head over to YouTube. I'm going to drop our YouTube link, and then you all just follow me, subscribe, like, turn on the notification buttons, share it to your friends.